Hello everyone, what's up? This is Toma for the Market Zone, and this is a new weekly markets analysis video where I'm going to share with you some thoughts I have about the recent markets activities. Thank you for joining me for this video. I know it's been a while since my latest video, but I've been quite busy with my wife giving birth to our third child. If you have children, you know what it means, and if not, I guess you will know soon. Thank you again for joining me. If you want to leave comments for this video, you can do so by leaving comment on the YouTube channel. And if you want to contact me directly, you can send an email to tomaj@themarketzone.net. We have seen very interesting technical development recently, especially for the S&P and the dollar index, now that the markets are pricing in better odds for potential rate hike during June's FOMC meeting. Yellen was sending out her hawkish Fed members to endorse this rate hike scenario, and yesterday she endorsed it herself. And we have seen the dollar index and the S&P respond accordingly over the last 2 weeks. But we are heading for an interesting trading week that can change everything, with OPEC meeting, ECB meeting, and of course jobs week for June. So everything is still open. Make sure you follow price, you don't follow news, or you don't have any certain bias that blinds you from taking the right decision. Everything is still open, and I'm going to show you right now what I am focused on. The first chart I want to cover is the S&P. This is the SPY chart, daily chart, and if you read the recent weekly markets analysis newsletter, you saw that I shifted from all bearish trades to mixed trades, some bullish, some bearish, and the reason was that I saw and I recognized that the S&P is respecting the bottom of this trading range between 204, 205 to 212. And you had to pay attention to such details, and indeed last week we got the confirmation once the S&P closed above the trend line and the SMA lines, and you saw the respond by the buyers that came in and drove S&P all the way up to the top of the trading range. The same scenario you saw on SPX, bullish pin bar, continuation back inside the support zone, and boom, exploding higher towards the top of the trading range. Once you are not fixed on a certain direction or caught in a certain bias, you can recognize the shift in sentiment that the market is showing you right here when it closes inside the weekly support zone, or right here when it closes above the 50 days moving average, and seize the opportunities as such shift in sentiment offers you. And a great example is a trade idea I sent to the Lead Zone members last week for Twitter. And I told them, look what's going on Twitter. If the market is shifting, the sentiment is turning to bullish, it's a great opportunity, all-time low, accumulation, and boom. On Friday, we got the rally, hitting the short-term target zone, and probably we'll see continuation next week when Twitter will hit final target zone for our bullish setup. And that kind of opportunity would have been missed if I was caught or fixed only on bearish trading scenarios. So make sure you aren't caught in a certain bias. Be flexible, be open-minded, and see what the price is telling you. No matter what you feel about it, just follow and believe the price. So what's next for the S&P? Are we going to see a new all-time high record for the S&P? What do you think? Or are we going to see S&P hitting the top of the trading range, rolling over and retesting the bottom of the trading range? As I mentioned, we are heading for a very interesting trading week with the OPEC meeting, ECB meeting, and the jobs data, and I will be focused on the OPEC meeting. Oil hitting $50 handle, amazing rally for the $26 handle that I called it. Bullish opportunity. If you recall, if you've been following me on TradingView, I mentioned that oil is going to explode higher from the $26, $28 zone. And indeed, that's what it did. But now when it reached the $50 handle, maybe it's time for a pullback, and the OPEC meeting can trigger such a pullback. So pay attention. Remember that oil was the one who behind S&P rallies in the recent weeks. When stocks didn't support the rally, oil was driving S&P higher, and if oil will tumble, I'm not sure that the S&P can stand near these highs on its own. So pay attention to OPEC meeting on Thursday next week. One more thing that may prevent S&P from exploding higher to new all-time highs territory is where its sectors are right now. And if you saw my blog post or my TradingView analysis, we have utilities sector right inside the PRZ of a bearish bet. This is an old setup that already hit the target zone, bounced again, declined, and now retesting the PRZ again, hitting the SMA line resistance zone here right now. 48 is a 49 is a resistance zone to focus on next week with a stop above the $50 handle. Final target zone is right here near the 200 days moving average. So utilities sectors present a bearish opportunity, and also energy sector towards OPEC meeting. Two bearish harmonics. Pay attention to energy sector this week. 67, 68, 70, that's the resistance zone right here with the two Gartleys that you see right now, and also another index, another sector that I mentioned this week, XLY consumers, hitting a sell zone right here with several trend line resistance. As you can see, we have the downtrend line here, the bottom of broken trading channel, and also the bottom of a trading channel here. So we have interesting sell zone also in consumer sector. Three sectors that show bearish opportunities, while the S&P is about to hit a weekly resistance zone. So I know that many voices out there say that the S&P is going to explode higher, but as I mentioned earlier, don't be fixed on a certain bias or direction. Just pay attention to the price. We have bearish setup both for the S&P and its sectors. Be open-minded, see how the price reacts to these sell zones. S&P, XLE, especially XLE. I think that's the best opportunity to trade this week if OPEC meeting will send oil lower. Two harmonic patterns here can send XLE towards the 200 days moving average. So pay attention, and we will see. I will update you with the results. The last chart I want to cover in this video is the dollar index DXY with this beautiful bullish butterfly that triggered the dollar's latest rally above 94, 94.5, which was resistance. Now it is support, and above 95 that was confirmed yesterday as support when Yellen endorsed the potential rate hike scenario. We will probably see the dollar index continue north towards the 200 days moving average soon. I'm not sure it will be without a small pullback, but I think that's where the dollar index is heading, and that's the potential sell zone to monitor for the next few weeks. If the dollar index is heading higher, that means that the EURUSD is heading lower. And right now we see the EURUSD testing the 200 days moving average. That's supposed to be some sort of support line. I'm not sure it will hold 5 days before ECB, but it will be tested this week. Pay attention to this SMA line. If the EURUSD will close above it, it may create some rally. But I think that here, right here, near 1.16, when the EURUSD created a pin bar after retesting a broken uptrend line, I think that it signaled the top for EURUSD with a force break to the 114 resistance zone. And even if it will bounce, it will probably meet 113, 114 as resistance levels and roll back and decline lower. We will have to see how this one will play out. EURUSD creating a bearish signal when it broke below this uptrend line before the ECB meeting. So dollar index probably heading north. I'm not sure how much. Pay attention to 200 days moving average in dollar index, and EURUSD, pay attention to the 200 days moving average towards ECB meeting. Perhaps small pullback to meet resistance levels 113, 114, and then see how the price reacts to this resistance level. Thank you again for watching this video. I hope you liked it. If you do, please leave me a comment in the comment section below or press the like button. Subscribe to the channel, and if you want to tell me what you think, write me an email to tomerj@themarketzone.net. And don't forget, if you want to take your trading to the next level and really do what the kind of things that I'm doing, to learn how to do it, you can start your Elite Zone trial right now for $9.99 for your first month. Send me an email or press the link that I will leave below and join the Elite Zone members. No matter if you trade forex or stocks, you can choose the kind of program that you can subscribe to. Thank you again. See you next video. Bye bye.